Welcome to All Things Financial with Jack Driscoll.
Welcome back, everyone, to another edition of All Things Financial. As you know, I try to discuss many different areas of financial concerns to individuals, business owners, for estate planning, seniors, college planning, all different levels of life and all different aspects of life, including your career. In today's show, what I wanted to do was speak to you business owners, and I want to cover the 10 most common areas that business owners are making mistakes in that are solvable, preventable, if they're recognized. So what I wanted to do today is touch on the top 10 mistakes or oversights that I see business owners making. The first one I would say is this: with your business insurance policies, your package, whether it's the property coverage, liability coverage, automobiles, workers' compensation, whatever it is, one of the big mistakes I see business owners making are they're having the building that is housing the business owned by the owners individually. And what we see as a mistake or a possible risk there, and we lead to the attorneys to help solve this problem, is if the building is owned by the owner or the owner's and owner's spouse, let's say, we're running a risk that a lot of business owners don't think about. So we have the business, and maybe the attorneys have recommended doing a corporation, doing a subchapter S, doing an LLC formation for the main purpose. If anything happens in your business, the attorneys will tell you a lawsuit, a slip and fall, they can't get your house or individual assets. But then we run into evaluating your business situation, and you and your spouse might have bought the building in your name. So we see a problem there, and it's something that most people might not think about. Then to further compound that problem, we see the business insurance policies written in the name of the business. So the named insured is the business, the LLC or the subchapter S, or whatever formation you caused, and then you see no husband and wife listed as additional insureds, even though their name is actually on the building. And there's no separate building insurance because the building insurance is included in the business package. So now we have a big gaping void that nobody recognized. Folks, that's problem number one that I see. We run into individuals. They say, what's a potential solution? We say, get to your attorneys, review your whole estate plan, review your whole business plan, and they might advise you to rename the building in a separate LLC, not the same name as the business. And then if there's a slip and fall claim or a business lawsuit, they're not under the same business name, and they're not exposing your personal assets by being in your personal name. So get to the attorneys. That's problem number one that I typically see when I'm reviewing insurance policies. Problem number two is when we get to the workers' compensation insurance, I find a lot of business owners it's been recommended to exclude the business owners from workers' compensation coverage because owners, as many of you know, and executive officers are not required to cover themselves on a workers' compensation policy. So it's possible then to reduce your premiums, it's been advised, to exclude the owners and officers from the workers' compensation insurance to help save premium. Now, folks, it might be a good idea, but it many times is a bad idea. Take this situation, we have a business owner and they're in the roofing business. That's a very high-risk business for workers' compensation insurance, which means it's a very high rate. So I understand the logic of considering removing the owners from the workers' compensation policy because many times the owner has the highest compensation also. Workers' compensation insurance premiums are based on the payroll. So if the owner has the highest payroll and they're allowed to exclude themselves, yes, it might result in a very large premium reduction. But number one consideration, what if the owner falls off the roof? Do we have medical coverage, which we would have had in workers' compensation, Do we have income replacement coverage, which we would have had in workers' compensation? We have to be careful when we exclude ourselves. Are we going without coverage? Now, most people say the medical coverage would be okay because you have regular health insurance for the business owner. But most business owners, or many at least, don't have their own individual or business disability income protection coverage. So now we're going bare without coverage at all. And the owner gets disabled. We have no replacement of income. We have no replacement of paying business expenses. And the business might fail during the length of disability of that owner not having any income replacement coverage. And here we excluded them from workers' compensation, which would have paid continuation of that individual's income. So that's a huge mistake I sometimes see. It needs evaluated in every case. Take now, for example, the business owner who's in management duties, even if it's a roofing company, but all they do is they're only in the office now. They're only doing clerical duties, or maybe the spouse is the bookkeeper, and they're excluding both the owner and the spouse from workers' compensation. I'll sometimes come in and say, look at the clerical income class. The premium is only 36 cents per $100 of payroll. It might only be saving the owner or the owner's spouse, who's the bookkeeper, maybe $400 a year to exclude them because they're in a low clerical class. It was dirt cheap to keep them on the workers' compensation, which means now they're covered if they're driving their car in a car accident used for business. They're covered if they get hurt in anything in the business, and have full, basically, disability income coverage through the workers' comp, that here you excluded them for not realizing that minuscule benefit. So it's a mistake in many cases. Now, a third mistake I see a lot of business owners making are with the personal vehicles being on the business insurance policy. And that involves we're adding cars onto a policy, or we replace a car with another car, and the owner's not thinking or realizing. They get to the dealer and the financing's better if you put it in your individual name, or for whatever reason, they're buying a car in their individual name, but putting it onto their business policy. Huge mistake, folks. Another one is taking your individual cars that you already own as an owner and putting them onto the business policy, but they're not titled to the business. That's a big problem that we find in many of these business insurance policies. The titles on the vehicles are not matching the ownership of the business. Now, I see another one where we have all the cars, including the family cars of the business owner, and they're all on the business policy and all correctly titled to the business owner. The problem there can sometimes result because business insurance policies do not extend broad coverages to the rest of the family, or for borrowed cars, or for cars that you're lending, or for cars that you rent. On vacation, you rent that in your individual name, not thinking. Well, when you have at least one family automobile and one family automobile policy with full coverage, at least one is recommended, not having all your cars on the business insurance, because the personal policy now has all those extra coverage enhancements and can share coverage to rented cars or family members borrowing or lending out their own car. Let's say they're at a party, they may have had a little bit too much to drink, they give the keys to a neighbor, they drive home. Everybody's automatically covered much better having a personal car policy on at least one of the cars in the personal name. Now, another mistake I see in business owners and business policies are no crime coverage or no cyber coverage. These are new exposures with cyber risks that we didn't really have or identify 10 years ago that are paramount now. They're one of the most important coverages and also one of the least insured coverages on the policies today. So everyone needs to revisit the insurance coverages for crime. That's employee dishonesty, employee theft, it's robbery, it's cyber. So there's a lot included in that category of coverage, but that cyber exposure is huge. That's employee risks, that's customers' risks, anybody's identity compromised, and the building owner can be held liable for not properly securing that information. Coverage is available, and we need to be very, very careful about protecting the business and protecting the business owners against lawsuits, and might even be class action lawsuits if someone inadvertently gets a hold of your whole client list and that list is compromised, the information shared and sold to other hackers or even other countries or competitors. That's a huge problem. We also see sometimes your websites are compromised and rerouted to other websites looking like your own. You could buy coverage for all of these new issues that we didn't even have to address 10 years ago. So that's another mistake that I see. I would consider that mistake number 4. Now, getting back to these business owners, building owners' names on the policies. The biggest mistake I see, as I'd call number 5, would be we don't include everybody on the policies. When you look at a policy and you see the building is owned by the husband and wife, let's say, and the husband and wife's name are not on the policy. Or we'll see 3 partners in a partnership, and we'll have the partnership insured as the named insured, but we don't see the endorsement for additional named insureds, each of those 3 partners, or owners or officers, let's say, but partners or LLC members included on the named insured on the policy. And the reason we want that, and the mistake why we're seeing they're not there, is people aren't thinking, the insurance agents actually aren't advising it. So we're seeing the gaping, missing hole where now we need, and the named insured is the defendant in a lawsuit. The insurance policy will defend for the named insured, but sometimes won't defend the individual interests for the owners. If the individual partner or member, let's say, happens to be the one that had personal liability as a result, and that resulted in that business claim, we need to make sure the business policy defends not only the business interests, but also the individual that might have been liable for causing that problem. So we want to get all the names on there as a named insured. It's a big problem I see when I'm looking through policies. Now, another one is this. We go along in our business, and most business owners run into the same situation. We are working hard, day and night, 24/7 it seems, and 7 days a week. We many times don't have time to stop and think about the business. And one of the issues is, what happens if the key employee or the owner or owners or one of the partners dies or become disabled? In many cases, there are no plans made in advance on protecting the business. And also then we lead to the struggle. Let's say one of 3 partners prematurely dies, unexpectedly. So people think we have a lot of chances and a long time to do this type of planning. And here there was a car accident or a heart attack, and one day they're gone. No planning, no preparation, they're just gone. If we don't have any, as a business owner, plan in place, which is called a buy-sell agreement, already in place in advance, then you're probably in for a fight. The 2 remaining partners are now picking up all the work of the 3, but the spouse, the husband or wife, non-working husband or wife in the business, just probably inherited the 3rd share in the business. And let's say they don't want bought out. They want to come in and be a new partner. They think that might be fun. We'll come in and be a part of this business. No experience, and they have a 1/3 voting right, and they now are your new partner. I've seen many businesses totally ruined over the next couple years because the buy-sell agreement was not made in place in advance among the 3 partners, agreeing if any one of us die or become disabled, permanently disabled, we agree to sell our share to the remaining 2 partners and fund the buyout to take care of my spouse through life insurance on each of the three partners. So the business does not have to fund the buy-sell agreement. Now the two remaining partners who have skills in the business are unencumbered. Continuation of the business is running without lawsuits. Banks won't call your loans because they see seamless continuation of the business, and the non-working spouse is adequately cashed out for the value of the business, which was predetermined in advance, either the valuation or a formula for attaining the valuation, which is fair for all three partners. That's another big mistake I see that is being made with business owners that can be solved. So that's business mistake number 6. Number 7, any business who offers a 401k plan, any sponsored retirement plan, is governed by and ruled have to comply with ERISA rules. Well, the problem there is the plan administrator is a fiduciary. Normally the plan administrator, but not always, is the business owner. The problem we run into is if the business owner offers a 401k plan, there's legal liability if an employee feels that there were not adequate enough options available on the 401k, or it was mishandled in any way, or the plan wasn't shopped out often enough to make sure the fees were competitive. And lawsuits can be brought by employees and or their deceased spouse heirs, let's say, to the plan administrator, which is the owner. And the owner does not have adequate coverage in many cases, we're finding on these business policies. How do you get the coverage? You would think, number one, you're bonded for a fiduciary because your 401k provider advised that, recommended that, so you're covered. But no, that's not enough. There's another coverage that must be bought that most insurance agents, property casualty agents, are unaware of, and many business owners are unaware of, and that is ERISA coverage on your business insurance package, having nothing to do with your 401k. But we add the rider onto your business fire property package, ERISA coverage to cover you for your fiduciary liabilities for your 401k. A seemingly unrelated coverage, and yet it's huge because that coverage is bought, and oftentimes missed, of course, on your business package. Now another one, number 9. Many business owners have graduated to the level that they're highly regarded in their community, and banks and other associations, they like to volunteer and give back. And they get listed on boards, different community boards, corporate boards, or association boards of directors. A big problem here, there's no directors and officers liability insurance in many cases with those associations, with those even banks or corporate boards. They might be on a hunting club, they might be on a charity organization, they might be on a baseball organization, a very seemingly small organization. But on the baseball organization or hockey, let's say, one of the kids develops a concussion, it comes back to a board of directors vote maybe that they had a year ago that they said, no, we're not going to replace the helmets until next year because we can't fit it into the budget. Here we've got a paralyzed child, let's say, or someone with concussion issues, and the lawsuit comes back to the board of directors, and the board of directors has no directors and officers coverage. So you look and you say, well, my business insurance cover that. No, you as a board officer were not acting on behalf of the business. Well, my homeowners or umbrella policy cover that. No, they won't cover directors and officers type of liability acting on a board. You're on your own, and all your personal assets might be at risk, and maybe even your business assets, because you were individually on a board of directors without directors and officers liability. And finally, the biggest mistake I see business owners making on their business insurance coverages. They're shopping the same old coverages year after year after year. So what we're always hearing when we go to quote on a business insurance package is, I want quoted apples to apples. You make the same mistake too, I'm sure. I want to make sure I'm protected for what I have right now. What a lot of people are missing, the business owners are missing, or the HR departments or the person in charge of shopping for the insurance is, Has anyone reviewed the coverages, programmed your needs, designed a package tailored and suited to your individual business needs? Or are you forcing them, these new agents that you're allowing to quote, to only look at certain pages of the policy and you say, here's all I want. I want quoted on apples to apples. And you'll show them their declarations pages. And declarations pages, by the way, only show the maximum limits for what you're covered for. They don't even show the coverages for what those limits will be paid out. So the biggest mistake I see business owners typically making with their business insurance is they are quoting only the declarations pages, limits only, not showing all the coverage pages underneath. We'll cover you for water loss, or we'll cover you for drive other car coverage, but only the limits. And they give that to every agent, and they say they're shopping apples to apples. One of the biggest mistakes here, if you don't remember anything else I said in the show, yes, have new agents quote apples to apples for a fair comparison, right or wrong. But please pay attention and allow agents the opportunity to program your needs in the business, ask you pertinent questions, and in addition, help define your growing needs since your policy was first written, and allow the policy to evolve with your needs into your new, larger size business, more complex business, and do a tailor-made, comprehensive program meeting all your new business needs that may not have even been evident before. All right, folks, I appreciate yourselves all tuning in. I thank you very much for listening to All Things Financial, and I'll be back again next week.
You've been listening to All Things Financial with your friend with the answers to all financial matters, Jack Driscoll of Driscoll Insurance and Financial Services. Securities and investment advisory services offered through Sage Point Financial Incorporated, a registered broker-dealer and registered investment advisor and member FINRA and SIPC. Driscoll Insurance and Financial Services is not affiliated with Sage Point Financial, Inc. or registered as a broker, dealer, or investment advisor. You can reach Driscoll Insurance and Financial Services Incorporated at 412-833-1500, and they are located at 2738 South Park Road, Bethel Park, Pennsylvania, 15102.